Hi, good morning, everyone. So welcome to our daily briefing today. So today is 7th October, which is Thursday. So let us take a quick recap on our previous important economic data. So the first one is Reserve Bank of New Zealand interest rate decision. So previous is 0.25%. The forecast is 0.5% and the actual is same as the forecast 0.5%. So we can see that they raised their interest rate by 25 basic points last night. Okay, yesterday. So we take a look on the market graph here. Let me take a new share first. Okay, so let us take a look on the market graph here. As we can see that this volatility is caused by the interest rate decision yesterday in the morning. Okay, but it doesn't really affect much to the NZD USD yesterday. But NZD USD went down yesterday because of the US dollar index. So we can see that the effect by the US dollar index is overcome the interest rate decision. Okay, so the next one is UK construction PMI September. So the previous is 55.2, the forecast is 54, and the actual is 52.6, which is lower than the forecast. So it is actually not a good news for the GBP, but we can see that the GBP USD is actually went down last night. Okay, so because of the US dollar index too. Okay, so we go back to our PowerPoint here. Then the next one, the US ADP employment change September. So previous is 340,000. The forecast is for 422,000, and the actual is 568,000, which is a lot higher than the previous and also forecast. So this is actually a good news for the US dollar. Okay, but we can see that the US dollar went down last night, not because of this important economic data of this ADP employment. US dollar actually went down last night because of the bond yields. It's dragged down the US dollar index, and then we can see that a lot of investors, they are going to another place, which is gold and also the share market. Okay, so we go to the next one is US EIA crude oil stock change 1st October. So previous is 4.578 million and forecast is negative 0.418 billion. So the actual is 2.346 million, which is higher than forecast. So this is not a good news for the WTI crude oil. So let us take a look on the graph here. So we can see that the WTI, it went up the 7 years high here at $79.50 per barrel yesterday in the afternoon. I think in the afternoon, and then after that it went down after. Again, we can see that the WTI crude oil price went down yesterday after it reaches the highest level. So okay, let us take a look on the next part of our daily briefing today is a previous day market volatility recap for gold. So it's declined 150 pips, then rebound again, as we can see that clearly inside this red rectangle. So let us read the factor what happened on the gold market last night. So gold prices rose slightly on Wednesday and fell into a narrow range. Spot gold closed at $1762.84 per ounce due to the fall in US bond yields. Okay, so the gold prices fell down yesterday because of the US dollar index, and then it's rise up again because of the fall in US bond yields. But the strengthening of the US dollar limited the rise of gold. So we can see the gold is closed at 70-60 something yesterday. Okay, so we go to the next one is WTI crude oil. So the volatility is declined 290 pips here. So I just told you. Okay, so it reaches the highest level since 7 years ago, which is $79.50 per barrel. Okay, so let us read the factor here. What happened on the WTI crude oil yesterday? So after the increase in US inventories and Russia's hint that it is ready to alleviate the global energy crisis, so oil prices hit the biggest drop in 2 weeks. US oil falling more than 2%, setting a new low of 76.83 per barrel in the past 2 days. So this is the reason why the WTI crude oil dropped down. So the first one is increase in US inventories, and then the second is Russia's hint that is ready to alleviate the global energy crisis. So maybe they will increase their production, okay, their supply. Okay, so we go to the next part of our daily briefing for today is when come to US session tonight. So we have to focus on this important economic data. So which is the first one is US initial jobless claims, 2nd October, and the second one is Canada IV PMI. Okay, so we have to focus on these two. Fred Williams' speech at 8:30 tonight. So maybe he will talk about the tackle, okay, and the upcoming FOMC meeting about the hints for them. Okay, so let us take a look on the first one. US initial jobless claims, 2nd October. So previous is 362,000 and the forecast is 348,000. So the schedule is at 8:30 tonight. So if higher than expected reading should be taken as negative for the USD, while a lower than expected reading should be taken as positive for the USD. And then the next one is Canada IV PMI, okay, September. So previous is 66 and forecast is remain unknown. So the schedule is at 10 o'clock tonight. So if higher than previous reading should be taken as positive for the CAD, while lower than previous reading should be taken as negative for the CAD. So we go to the last part of our daily briefing today is the market update for gold. So the resistance level of today is 1770. Okay, so same as yesterday and also Tuesday. So support level of today is 1753, which is slightly higher than yesterday. So my personal opinion for today, I will take it as a range market since from Monday until now, we can see that the market is the gold prices ranging around this area. Okay, so let us read the factor here why it's ranging. Okay, so the US dollar climbed across the board on Wednesday, which is yesterday. So as the soaring energy prices trigger concerns about the inflation and interest rate hikes, so suppressing investors' interest in higher risk assets and promoting the flow of funds into safe haven assets, which is gold. Okay, so gold prices continue to maintain a sideways trend, and this pattern is expected to continue until the NFP employment report is released. Okay, so this sideways trend is more likely will maintain until tomorrow night after until the release of NFP employment data. So focus on initial jobless claims data today, and that's all for our briefing today. So wish you have a good day and see you again. Bye bye.